All right, guys, welcome back for another video. In today's video, I want to talk about the energy crisis. I feel like I haven't done a video on this for a while, so might as well upload one. If you guys aren't familiar with the energy crisis affecting Europe, Japan, and a lot of places in the world globally, with domestic energy supplies that aren't sufficient, this would be a good video for you. Um, now, really the crisis is affecting Europe primarily because of the political theater in Europe, where they pursued an energy strategy that that would attempted to fuel their domestic economies using complete solely green energy or primarily green energy. While they failed, they weren't able to do that. But of course, their economy and their populace still needs energy to survive and keep functioning as an economy and produce GDP, to make taxes and obviously provide society for the people. Um, and, in the process of doing that, they gutted their domestic energy production, but they were able to survive and meet their energy needs uh, by trading with Russia. And Russia was able to supply them with cheap energy. Well, of course, the Russia-Ukraine war has thrown a monkey wrench into that, and Russia has redirected a lot of their supply away from Europe. You've seen the Nord Stream pipeline supply running through there get cut in you know almost more than half, down to even a quarter at certain points. Um, and again, natural gas is not obviously not that critical in the summer, but as you get closer to winter, people need that to heat their homes. It does become a pretty serious issue. Um, and to a lesser extent, this issue is affecting Japan as well. Japan has had energy issues for a while since they gutted their nuclear energy production in the wake of Fukushima, the terrible nuclear disaster. Well, rather than just removing all their nuclear power plants, they should have just figured out how to run a nuclear power plant properly without you know uh, having another nuclear event. Now, if we just go to a chart, you can see here the energy ROI on investment is clearly showing nuclear as a powerful one to pursue. Now, France actually has a pretty decent amount of nuclear energy. They were smart enough to build that out, but currently, right now in France, because of different environmental regulations, they're not able to run those plants because they're not able to cool the reactors with the river water because in the summer it would heat the river water too much and it would damage the wildlife. But again, the once the summer cools down, they will have access to those plants. Um, Now, I think when you're talking about the energy crisis and its effect on the global economy, you also have to talk about the seizure of Russian forex reserves from the U.S. Treasury or by the U.S. Treasury. When Russia invaded Ukraine, they had a significant amount of U.S. Treasury reserves held at the New York Fed, and the U.S. Treasury just froze those assets, stole those assets. Of course, it was the Russian central bank, a lot of Russian entities, but also people who were just doing trade with Russia. That happened on February 22nd, February 2022. And that was a turning point in the world, right? Before that day, U.S. Treasuries were considered to be pristine collateral. They tended to go up in value, and they were censorship resistant. Well, now they go down in value and can be stolen. So, foreign countries can't ignore the reality that their U.S. Treasury savings can just be stolen if the U.S. doesn't like them. Right? It's no longer a safe haven. So they need they can't hold the majority of their savings in a saving that can be stolen by the U.S. at any moment. They have to do that in um, some type of saving network that can't be stolen. Now, ironically, a lot of the countries that have positive trade surpluses with the United States are countries that the United States doesn't even particularly like China has a massive surplus, and also other countries in the global South. So, but a lot of these countries have positive trade capital accounts with the U.S., which essentially means they have an excess amount of dollars in that trade surplus that they need to put somewhere, right, into savings. That money used to go into U.S. Treasury bills. Well, of course, for the reasons I just mentioned, foreign countries are going to pursue a safer network, and that means gold, Bitcoin, commodity, foodstuffs, hydrocarbons, commodity and commodity-based money, things that are priced in energy. Now, really, any country with excess energy and a capital account surplus could use excess euros and dollars to purchase gold and Bitcoin off the markets. Remember, most trade is priced in dollars and then secondarily euros. The entire energy trade is priced in dollars. So anybody trading oil has to generally has to trade in dollars. Now that may change in the future, but it still is that way in the global energy trade. And you know, really, what happens in that situation is that uh, energy is just being taken away from euro based trade, right? Uh, some of the dollar denominated markets outside of Europe in energy are still functioning, but Russia and the euro based trade in energy is funneling energy away from that euro based trade towards the global south to China, and that's being priced in currencies that are not euros, right? Priced in dollars and in yuan, basically Chinese yuan. um, and that's very significant for the euro because the euro, well, the European Union has a energy deficiency. So played out to its logical conclusion, the euro will inflate as the eurozone countries, print money and print currency to provide food and energy subsidies for their populace to acquire the energy they need for their base economy. And this only works until foreign countries are no longer willing to accept the euro, um, as settlement for their energy trade. Because of course they may have to debase the euro to acquire energy, but that only works until people no longer accept settlement in the euro. And the same phenomena will probably occur in Japan as they double down on yield curve control. China won't sit idly by as the value of their currency strengthens relative to the euro and the yen. They will devalue their currency as well in order to maintain a competitive pricing of their exports. Now, when I was talking about the positive capital trade accounts that some countries have with the U.S. and that forcing them to engage in trade and buy assets denominated in dollars, the reason for that is because they're exporting countries, and if they were to take those dollars and buy their own currency, that would increase the value of their own currency so dramatically that it would start to affect the competitiveness of their exports. And for that reason, these trade surplus countries are forced to buy dollar denominated assets. Well, like we just mentioned, the energy market is priced in dollars. So, you know, a lot of it's just another way that a lot of the other currencies that are lesser than the dollar will get cut off as this energy crisis worsens. And a lot of these lesser currencies will collapse into the dollar, especially, as the debt cycle continues to play out. And I think the fundamental misunderstanding about the current energy crisis is that it's really an issue with demand. People believe that rising interest rates will crush demand, but this is not true. Food and energy prices have inelastic demand. People need energy, they need food, Doesn't matter how high you raise, interest rates. That there's most of the demand is inelastic. This is really a supply side issue caused by the fallout of the sanctions levied in the wake of the Russian-Ukraine war. It has reduced the total energy supply and redirected what remains away from the West. That will have carryover for several years. The government will likely pass subsidies for food and energy tokens that will need to be paid for by new treasury issuance and yield curve control, going back to how the euro will debase their currency, to acquire energy. Ultimately, Europe can't produce goods at the same cost without cheap energy from Russia. Going back to the video I made about debt to GDP, maintaining a favorable debt to GDP ratio means securing cheap energy inputs. Put a different way, if a country can't secure cheap energy inputs, their debt to GDP ratio is going to spiral in an unfavorable direction, which means they spiral closer to insolvency, which means they're one step closer to needing to debase their currency to make sure they don't, that they stay solvent in nominal terms and don't default. The other option for these excess capital account countries is to channel excess hydrocarbons into the Bitcoin network. This avoids the need for storage and transportation of energy. This would, be appealing for countries in the global south who tend to trade raw energy products for a much lower price than developed nations who are able to sell the output of the raw energy as a finished product at a much higher premium. Now, most ASICs mining hardware is produced in China. China could levy heavy taxes on Bitcoin miners who could corner the market due to access to cheap energy. We all make bad trades, and although China has banned Bitcoin, they have an incentive to change course and pursue this path. Emotion necessitates that short-term action is volatile and governed by the irrationality of emotion. Game theory necessitates that all actors act in their own self-interest over the long term. If Chinese mining ever reached massive scale, the central bank would then hold reserves and issue its currency as a Bitcoin derivative. Fundamentally, Bitcoin price should be based on the price of energy it costs to mine it from the network, at least until all the Bitcoin is mined and the network is sustained on transaction fees. As these surplus countries exchange their fiat currencies for hard commodities, gold, and Bitcoin, the balance sheets of their central banks will improve, and the currencies they issue will become harder money relative to the Western countries with negative capital accounts, who are forced to sell their own currencies to buy energy and other commodities. Remember what we were saying about Europe debasing its currency to acquire energy. It's really just a balance of the battle sheet. Whatever central bank has a better balance sheet will have a harder money. People assume that rising prices of energy, gold, and Bitcoin would incentivize domestic producers to sell on the open market. But in an era where censorship-resistant money is valued, why would nations be willing to exchange it for depreciating fiat currency that is vulnerable to theft and seizure? Again, in a time of global war, kinetic war, open conflict, that's not a time. The type of environment where countries are more likely to hoard energy and to be less open and willing to trade, especially settle in trade for their hard energy in currencies that are rapidly debasing. That doesn't make a lot of sense. We're so used to acquiring money in terms of fiat terms and fiat accounts, and then comparing those numbers with one another. But we may be entering into a period in the world where that no longer matters, right? Nobody cares how much fiat currency you have. What they care about is how much energy do you have? How much energy do you possess? How many units of energy can you produce? And going back to the GDP number, it takes a certain amount of energy to produce 1 unit of GDP. Now, that's different for any economic activity, and you could say that the most efficient economic activities are the ones that produce the most amount of GDP for the less the least amount of energy, but you're still left in a situation where, in order to produce a very significant GDP without having to issue too much debt, you need to have access to cheap energy inputs. If you don't have access, if you know don't have access to those cheap energy inputs, your GDP is you're just not going to be able to fuel the economy that you need, to sustain your populace and you know keep keep the heaters running and keep the people fed. So it's a very serious issue because this is the type of crisis that generally occurs right before the collapse of a government. Right, if a government is not able to secure the energy and food needs for its populace, or at least make them available, that government is either going to figure out a way to do that, or they're going to face a revolution like very, very quickly. Um, so, you know, this, I think the one part where this translates practically into trading and how you could, shape your macro view to be more in alignment with what's happening in the world is to understand that this is an extremely volatile situation. And I think that volatility will be reflected in the prices of every asset, right? As the market shifts away from fiat pricing to assets derived and priced in units of energy that it costs to create them. So the fiat system is inherently unstable, and as the debt burden grows, the sovereign debt bubble grows, and the more credit you have in the system, the more unstable it gets. And you combine that with transitioning over to an energy-based system where that's what's valued. You can no longer print energy to acquire, or excuse me, print units of currency to acquire hard energy that takes real time and labor and energy to extract from the earth. As that happens, that'll be a very volatile process, right? Because it involves an incredible amount of leverage. At least, well, not necessarily, but there is an incredible amount of leverage in the fiat system. So as people chase that trade, they'll get liquidated. There'll be huge washouts. So the moral of the story is, yeah, as volatility increases, um, you can see some pretty incredible things. Uh, you know, uh, just look at it, the price of gold in Weimar, Germany. People, their eyes glaze over when you say that, but it's a great example if you want to understand what extreme face-ripping volatility looks like. That I would study that Weimar Germany gold chart. Um, Ultimately, volatility is the trader's best friend, but if it's the type of volatility that is beyond anything anybody thinks is possible, then it can be extremely dangerous, and you need to have a very high time preference to be able to operate in that environment. So just something to keep in mind. And then going back to the, I didn't really talk about the chart that we're looking at right now, but basically showing you the uh, different cost of production of different um, countries as far as the cost to mine one Bitcoin. Now, who knows how accurate this chart is? But I think what's interesting about this chart is how different that the cost of energy is in these countries. Now, the cost to mine one Bitcoin really reflects the base cost of energy, right? How cheap can people acquire energy in these countries? And typically, not in all cases, but generally, where energy is, the cost of production of Bitcoin is the cheapest, is going to be the areas where energy is incredibly plentiful. Um, so, like you've got Kuwait here, which has an incredibly low number. It's the lowest number on the cost of production. Theoretically, you can produce one Bitcoin for $1,000 there, whereas in Australia it would cost you 40,000, or here, 76,000. So when you're looking at this, right, and thinking about this from the perspective of a Bitcoin miner, right, there's huge arbitrage potential here. So there's a massive incentive for market actors to step in and arbitrage these spreads, which ultimately is very good for the energy environment, right? Because people suffer. Now, you could have a global supply issue caused by our incompetence, but a lot of the times when people suffer is because they're just living in an area where maybe their politicians poorly manage the country, or they just don't have natural resources, and they're in an area where there's particular expensive